All right, what is happening, traders? This is the Risk Manager Pro Excel that I have developed, and it's a Google Sheets document that I strongly suggest you use it in Google Sheets because even if you download the Excel and try and open it with the Excel on a Windows, the image, for example, my logo or some of the text is going to come out completely wrong. And I think that I've also seen some of these numbers, they don't come up. They show an error. So please make sure you open this through Google Sheets, okay? And this is what you'll see. This is a document, the settings and how to use it. So I'm gonna go over it real quick in this video to show you. And basically we want to start with adjusting the capital. So these numbers are all over the document, letters and numbers 1 through 5, 1 through 6, and A, B, C, D. So you want to look for these numbers to know where to adjust the capital, where to adjust the objective, etc. So number 1, we're going to look for it. It's right over here. So it's where it says initial capital, 5,000. So you can adjust that to whatever amount you want. The objective, which is right under that. So how much do you want to make? I'm personally aiming for 1 million every year, and you can just have smaller, I guess, objectives to start, maybe 500 or 200,000, or even if you just want to flip an account, 1,000 to 2,000, whatever you want to do. Then you set your daily goal. So here I have this little pop down cell that you can choose how much in percentage terms you want to make a day. Okay, and as you edit that, you'll see the daily goal over here to your right will change. So if I aim for a 2%, the goal on a 5,000 account is 102. This document, you might see euros or dollars. Just make sure you can also edit that if you want. But regardless of the sign or the symbol, rather, the number is what matters. So if you start with, I don't know, 1,000 and you want to make 2%, that's 22 bucks. And I know you're probably saying to yourself, that's actually pretty easy, or I guess very probable, right? Not that it's extremely easy, because, trading is not easy in itself. It's just, what I'm saying is it's very realistic. So yes, making 2% a day is it's not that difficult. Just 1% is 11 bucks. So everybody knows with 1,000, a small trade of 0.05 or 0.10 lots can make you well over 11 bucks, let alone 100 maybe. So yes, you play around with that to sort of adjust it to your risk management and your risk tolerance as well. Okay, what's next is the daily risk. Okay, so here I have my daily goal, and this number 4 is the minimum, average, and maximum risk I'm willing to take. So as I adjust these, I just set up a 1 to 1.50% as a minimum risk, and these two cells are going to change. This being the minimum and this being the maximum risk tolerance. As you adjust those, you'll see the amount that you'll have to respect if you lose, right? So if I bump it up to 150, you see it increases to 17 bucks. The average goes from 175 to 2, and the max risk, I set it from 2 every 0.25 basis points to 3. That's what I personally have found to be reasonable, responsible, and moderate within the high risk that trading is and involves, right? So okay, what's next is adjusting the fees per lot size. That's going to be all the way up here to the left, right there, that little cell, this column. It says commissions per lots. I did my best to basically put the most common used lot sizes, from micro to mini to whole lots. I traded with 10 lots, so I used 10. If you don't, it's fine, and you'll get there. But what I'm saying is, you have these predetermined lot sizes. Now you don't want to mess with those, because here for calculating the fee, which you could also edit, that you can edit. You have to edit the fees based on your broker's, based on the commission that your broker charges you. You have to edit these numbers, but don't add or edit these, because if you do, actually you could, but you just have to edit the commission. But be careful, because look at the up over here is a big formula that calculates the net profit. Okay, what happens is, if you make $100, there are fees, so you're net making less than what you actually made. So you'll see the profit you made in your phone, in your MetaTrader or whatever, but if you subtract the fees, your balance, that's what's going to be added. So you need to put, when you're writing down each trade, which you'll do here in this area where it says individual trades, you want to put, like, yes, let's say you win 100. Well, that, if you don't put the lot size, it won't subtract the fee, and so it'll be off. Your balance will be off. So here you have to edit. So let's say I did it with a mini lot. So that, in my case, it's 0.50 is 50 cents. So I made net 99.50. That's what gets added to my account balance as I feed it with the trades that I'm making. So the way you do this is you write the lot size and the amount. Okay, when you win, you write in positive numbers. When you lose, you have to write negative. Okay, and be very careful, because if you press delete on the fee, it'll erase the formula. And so if you ever get a mistake, make sure you always just kind of go up and see what cell you messed around with, or just Control Z all the way back. That's, I guess, the only thing with this whole document that you have to be careful with. But I mean, other than that, is very complete. So again, these are your lot sizes. You want to edit the commission that you pay for every one of these. If there's one that you use that's not here, just simply change one of these, and then that's it. You go with the flow. Then we go to the adjustment, right? Adjust broker's commission. So 6, that would be all the way up here, over here to the right, toward the middle of the document. It says broker commission per one lot. So now that is going to help us with this chart over here, this table. So in my case, it's €5 because I trade with euros. But some brokers, they charge like $7 for one lot. So notice that everything changes here. And what this tells me, this table is going to help me choose the lot sizes depending on the risk, depending on the pips. In other words, when I'm in my chart and I see, okay, I want to buy at this imbalance or beneath this low or at the support because I see reject, whatever your criteria is. Let's say you don't know how much to trade with. Let's say you don't. How do you identify? How do you choose how many lot size? Sometimes we just simply follow a weird rule of thumb that we probably saw online, like, all right, for every 1,000 trade one mini lot. But it turns out you in some occasions you might be willing, or not actually willing, but you technically and mathematically speaking, you have the possibility to trade a bit more lot sizes because the stop loss that you're thinking on putting the numbers might suit your risk management. So if I'm confusing you a bit, let me start over, with a different approach, which is from the chart. So just imagine you want to buy and you have a technical support area. Like, that technically speaking, if a candle surpasses like a specific area, you have to get out. Let's say that is 50 pips. If you go in this table and see pip value here, okay, lot size and risk in pips, minimum risk, maximum risk, right? So the minimum risk to lose $17 with one lot is 24 pips. To the minimum risk, which is the 17 which you edited here previously. Remember that, right? The minimum is 150 in this case. So risking 1.5% of my balance, the minimum risk, with one lot, how many pips is that equal to? Another way of looking at it is okay, with one lot, how many pips is equal to that minimum risk I'm willing to lose? And so that's what I'm saying. It depends on how you choose how to trade, because you can just say, I don't care pips, I don't care, I just want to risk 20 bucks. Doesn't matter how many pips, doesn't matter, just 20 bucks. So okay, fine, 20 bucks. Now, do you want to put a tight ass stop loss? Because you can trade 10 lots and you have to put a tick away, but what are the chances of you getting out? It's like 99.999% that the market just goes boop, takes you out and leaves. So obviously you have to give it a bigger margin of error. So therefore you cannot put too many lots, because you're going to widen the stop loss. So you need to decrease your lot size. And this table helps you determine, based on the pips and based on your risk tolerance, how many pips and how many lots. So you're going to play in this table until you get used to it, or until you figure out that sweet spot that, if it helps you. I personally play around all the time between 150 to 300 lots. 300 pips of stop loss. 150 is when I want to be very aggressive. I feel very confident that the entry I'm going to make is going to play in my favor almost by the second or minute. And what that allows me to do is I increment my lot sizes, but I'm going to place a tight stop loss, which can give me much more profit. And the moment I'm in profit, I'll lock in that stop loss to break even, and I'll basically minimize the risk as fast as possible. Okay, so, and then if I'm feeling a bit like, okay, I need this trade to have some margin of error, maybe New York hasn't opened and I'm trying to get in early, I'll leave enough pips as my stop loss. And I've realized that 300 pips, like, you have to be completely off if the market goes 300 pips against you. So notice here, for example, with this $1,000 account, 350 pips is 0.10. That's a mini lot, and that's going to give you a 17% risk, which is nothing, and it's a lot of pips. So it's points, right, in gold. Okay, I hope I didn't confuse you, or I explained myself well with this table. Some of you might use it, some might don't. If you don't, well, skip this or whatever. Now we go to how to use this. Okay, perfect. So we've edited all these things. Now, how do we use it? Well, number one, we have to put the lot sizes we're going to trade with, so that it already calculates the fee. Okay, so if you see, I can put the lots every time. For example, I do this, it'll calculate already. It'll show you the fee. Okay, so I can just do this. If I know I'm going to stick to 0.10, I'm just going to make a list and completely just go down and just edit the numbers. So I make 50. Let's say I make 75. And so on and so on. Over here, the same. You have to put the lot sizes first. Or let's say you put you made 75, don't forget to put the lots, because that way it'll subtract the fee. Okay, the reason I say put the lots first is so that you don't forget and you're already getting the net profit. Okay, number two, you want, so yes, for a winning trade is positive, for losing is negative. Okay, if I put I lost 20, it's not going to do anything. Okay, you have to write I lost minus 20. Right, oops, sorry. So here I go minus 20, and then it appears here, right? Because it's all automatic. Okay, and again you have to put the lots so that it subtracts the fee, or in this case it adds it. Okay, see the total daily results. So these are the individual trades that you're going to place. And then here you want to put, whenever you finish your session, you're going to add the net total. So let's say you have a few numbers here, you hit that and shift, and over here to the right, you can't see it here, but on the bottom of right, you'll have the total, the sum. You have to add that and manually place it here, and it'll tell you, as you can see, every cell has a percentage gain. Now, you might ask yourself, why do I want to see my individual trades? Because over here, there's a whole risk management control. And this is where you're going to see your win ratio and the risk rate that you're trading with. Okay, sometimes we make trades that we don't necessarily think we're risking too much, yet we are, or vice versa. Maybe we think we're over risking, but we're not. My point is, let's feed this a few numbers. So 100, let's see, we're going to trade with 0.25. So copy, paste, 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 paste. And let's say that we made a few winning trades, obviously some losing. So let's say 85, 250. I don't know. Let's say we made here 80. Okay, so and then here 140. And then here we had a few losing trades with 0.25. So here we lost 84, and let's say we lost here 120. I don't know, making numbers up. So as you can see, you'll start, notice that I didn't put in negative. And so this is wrong. It has to come out negative 84 and minus 120. Thank you. So now we can see here, for example, just here, we can see that we are winning more than we're losing, but we are above our not estimated, but our risk levels that we set. Okay, we set these levels and we're trading well, which is too high. So that's why this, after adding and making all these calculations, it says your risk is high, control your losses. Even though our win rate is positive by double, we won 6 and we only lost 3. And our biggest win is 250, our biggest loss is 120. But notice that that's where the problem comes, because we are losing. In one trade, we lost basically almost 7%. You see that? When normally we have to only, so this is where you have to sort of guide yourself, and this will tell you, okay, now what happens if we start lowering those losses? So let's say on day 2, which you can also edit, and as you trade, you have to put the day 1, day 2. Let's say we start making more trades, and we have to feed this a lot of numbers so that the averages add up. But I want to show you so that you can see how this thing comes up. So 85, 250, 17, I don't know, like 95, 78, 125, and then 140, and over here we lost. So check this out. If we put minus 35, minus 17, minus 25, minus 13. So as we decrease those, we might start seeing, we have to actually put way more numbers. Let's fix this so you can see it. If we only lose here minus 20 and then minus 8. So notice how these numbers are much lower. And notice how now the percentages aren't that high. Now it says low risk. So your risk rate is low, you're good, right? Because you are within the minimum and maximum risk tolerance that you set manually. So this is the maximum as you can get. You can obviously put more, but within these parameters, 1.72, you're good. You're not well enough, because if you can actually make it even lower. So let's say here we go to let's say here we go. Let's say we make only -8, and here -12, -7, I don't know, 10, -12. Now it's gonna say outstanding. You are at a minimum risk. You're actually well below the minimum percent, so you're outstanding. You see that? And then obviously visually you can appreciate it here with all these big wins and these little losses. Now, I want to make a quick parenthesis. I don't suggest and I don't motivate anybody to force yourself to try and have this perfect risk reward and risk rate at minimum. I don't, I've been using this a long time, and I've managed to be in a sort of almost red warning here because you have to risk. Uh, I'm I'm not telling you to gamble. I'm telling you this is a risky business, and if you want to win big, you're gonna have to risk a little bit more. So, I'm not afraid of having here a 35 loss that is gonna kick my winning and losing percentages a bit higher, right? For example, here I'm already in you're good, right? If I lose 50, -34, this is gonna start incrementing. Here it is, crossing limits. So here's another one that I'm reaching the -3 maximum percentage of loss, and as I get close to that, here it says 2.78. It's gonna turn red and says, hey, you're at a medium risk rate. You're crossing your limits. You're not above them, but you're crossing them. So control yourself, right? This is where I've been, and it's still great. Okay, like I said, just 3% is actually not much. Let's say I have a bad day and I overtraded and I lost 150. That's gonna bump up everything. It's gonna see control losses. Yeah, of course, right? But if I'm making these big wins on the other side, that's gonna compensate the balance. And even if it says that this ratio might be negative, as long as I'm winning more than I'm losing, everything is gonna be fine and it should be sustainable. Moving on to the win ratio, the perfect win scenario. This is what's interesting, and this is where I think a lot of you are going to find it helpful. Well, apart from everything else, this is a very, very helpful thing that I made up in this sheet, which is here. The win ratio perfect win scenario. So, as I adjust the daily goal over here, let's say 2%, notice it changes here, and these numbers are also going to change. What this is going to tell me is if I were to trade and make a perfect day every day, meaning I'm going to get that 2% and I'm done, or 3% and I'm done, or the 5%, whatever it is, if every day you make that goal and you don't lose, or if you finish, even if you lost, but if the day you finish with the goal, you're gonna be able to see on this column how many days it's gonna take you to reach different checkpoints. And I've highlighted in yellow the different checkpoints. It could be 5,000, 10,000. It's gonna also be the 50, the 20,000 mark, the 100,000, the 250,000, the 500,000, eventually 1 million, 2 million, 5 million, 20 million, and that's basically it. But where this gets interesting is as I feed the day. So this day I won 19%. This day I lost 4%. Let's say the next day I lost again, but I didn't lose that much. I only lost 34. Minus 34, that's minus almost 3%. Let's say I have a great day here and I got a good trade for $300. That's 27%. Notice these numbers here. These numbers here are popping up. You see that? What these numbers are telling me is that I am these many days ahead of my schedule or ahead of the perfect win scenario. Okay, so I am, as you see the numbers, right? We're here. So this is the day, the current day we're in. And we see that we are 1, 2, 3, 4, 5, 6, 7 cells. Numbers came up in 7 cells. That means I'm 7 days over schedule or ahead of schedule. Now, the way you could interpret this is, for example, you could say, okay, I could take a 7-day vacation. I don't need to worry because I know that if I continue to making this and if this has been easy, I am fucking on track to making in these number of days, because these are the trading days, TD trading days, 1, 2, 3, 4, 5, 6, 7. So with 1,000 making 3% every single day, how many days is it going to take for me to double the money, for example? So we look for the 2,000 right here, 24 days. How many days is it going to take to get to that next checkpoint, which is 5,000? 55 days. But now look how many days you're ahead of that schedule if you're making these sort of moves. Let's say let's not be too ambitious. Let's say we're getting 50, we're getting 65. Over here we're losing 25. We lost 100. Let's say we overtraded, whatever happened. Here we made another one of those big days, 150. Notice that these are realistic numbers and you're still ahead of that perfect win scenario. So again, interpreting in terms of like the vacation thing, you can either take a break for a week because you're ahead of time. So you can, you need to, or you could say, okay, I'm ahead. So I've got extra profit. I can either increase my risk, right? And sort of say, okay, I have extra money. I'm going to increment my risk because I've got 7 days worth of profit extra that I can risk. And even if I lose it, I'll be back to the current perfect win scenario. So you can play around with these like this way so that you can either continue to increment your process or make it faster, or just get better at your risk management, because in this business you also, again, you have to be a hunter. You really have to be hungry for this, and you have to risk. I mean, you can stay trading 0.10 lots, a mini lot forever, and fine. You can, you'll get $1 million in 3 years or 2 years. But if you know what you're doing, and as you get better, you're gonna realize and you're gonna be able to risk more because you'll have better technical knowledge. You'll have more confidence. You'll have a plan that you're going to stick to. You've had a setup. Like, let's say you're at that sweet spot where you've got yourself figured out. You got a structured plan you've been following. Is not perfect because nothing is perfect, but you're there, right? Well, how can I maximize this? How can I continue to level up? This is a great tool to precisely help you see those things that maybe not everybody does in terms of like thinking in these terms, like, okay, I'm ahead of my schedule, what can I do? This means I can take a few days off, or actually, you know what, I'm gonna risk this because it's, if anything, like my setup is there, everything is there, there's news, like I see it, I want to try and risk it. Do it. You fucking 7 days ahead, you got money to risk. You lose it, fine, you go back, you snap out of it, you say, okay, I tried, right? We missed it, but I'm still in this perfect win scenario. I am still holding. I still got my money here. I still got my risk tolerance is checked. Or you actually make it, right? You have that extra money. You have those extras that you risked more. Boom, you got a trade. You're now like, you've made a big milestone, and you're leveling up your trading because you have these numbers more sort of clear, and you're looking at it from this other perspective of, okay, where do I want to be? Where am I now in terms of that goal? How much money how many days are left, or how many days do I reach my next checkpoint. Okay, I'm over it by 20%. I'm gonna risk 5% extra. Let's do it. That's what this is about. Okay, so this is how that column is gonna help you out a lot. And then lastly, like I say here and put it in words, if you start seeing numbers in this column, it means you're above the perfect win scenario. Each column represents a day, which means you would be X amount of days ahead. Okay, I'm referring to this column right here. Okay, as I make profit and as I am above, you'll see the more numbers that you see here, the better you are. Because obviously, if I just continue to win 50, 100, 75, I don't have to, be too crazy about this. Let's say we get a great day, 250. Notice that as long as I always see numbers here below the day I'm in, that means I'm above and ahead of time and way ahead of my goal, and my goal is I'm gonna reach my goal faster than I think. This also helps you stay grounded. Okay, now again, if I just book in here losses, then you're gonna see those numbers start disappearing, because you're gonna basically put obviously these are a step backwards, right? So minus 200, and eventually you'll reach a point in which these numbers start to disappear, and that means you're now falling behind schedule. Here, notice how we're in this day 17. There's no number here. That means I'm 1 day behind. I am below the perfect win scenario. Okay, let's say I lost again here, another 85, another 120. Let's say I lost here 250. No numbers here. No numbers here. I am 3 days behind schedule. I am in day 20 right here. And there is 1, 2, 3, 4. 4 days behind. As I start making back some money, 350, 250, 200, 150, boom, I'm back here on schedule. I am back 1 day above the perfect win scenario. You can also compare it with the balance. My account balance here is 2,106, and the perfect would be 2,032. That means I am a day ahead. So as again, you want to see numbers pop up here. Okay. All right, and that's it when it comes to feeding the document. Here you're going to see a nice chart of the capital growth, a chart of the trades, and here you're going to see these pie charts get filled as you get closer to your checkpoints: 5,000, 10,000, 50,000, 100,000, and the 1 million mark. Over here you see this, basically your win ratio, and these are spaces for coming up a bit more advanced analysis that I'm working on. But I hope this clarified everything, and if you have the document, I'm gonna leave a link to it on the description of this video. It's only $11, so I hope this helps you all, and yeah, good luck. Take care, everybody.